Okay, great. So let's start. Hello everyone. Thank you for joining us today. Thank you for attending. And thank you for fxstreet.com to giving me the opportunity to speak. Okay. For those who aren't familiar with our series of webinars, it's preferable you see at fxstreet.com webinars page our recorded webinars in order to understand how we analyze the market, how we give the levels, okay, how we interpret the market. We mainly use rank of our charts and market sentiment indicators, okay, like you'll see in the following webinar. Okay, my name is Telmo Pinto. I'm the founder and director of market operations at Intuition Trading Group. For those who aren't familiar, we are a team of professional traders dedicated to provide simple, real-time, unified trading solutions for investors. Okay, our main core business is automated forex trading signals. Okay, so let's start. Well, today finally we have a move on the market. In order to give the disclaimer. It's important to know that any levels or any interpretation, my interpretation in the webinar, they are not a solicitation to invest, okay, and you should carefully consider your financial situation as to the suitable to your situation prior to making any investment, okay. It's preferable to seek advice from an independent financial advisor if you have any questions or concern, okay. So let's move on. Finally, today we have the markets moving. Okay. Let's talk about the euro. Is the important pair now? Okay. Okay. Here at the left we have the 21 pips. Okay. Rank of our charts. On the right we have the 34 pips. Okay. So yesterday we are talking about this level, the break of previous high, okay, this level here. We talk about this, but today we see that market touched that level and then suddenly, okay, come down, okay. On the 34 pips, we can see that market is losing some momentum here, okay. We have here this slower movements here, okay. So we can interpret this as market is losing some momentum, okay, on the market. If you have entered long here on the break, is important you see now the key level is remain, okay, that's 125.50. This level, the important, okay, level, go and test at 147 here, okay. Bigger lows of the market, so this level is important too, okay. If can break this level and can break this, okay, we can think in market will test the 124.70 area, okay. So the 34 pips, okay. What we can see here is, okay, this is a longer term. This comes from May, okay. This comes from May. We have here this level, okay, a possible test, and you will see this clearly on the market sentiment indicator. So we can interpret this that market is losing some momentum, although. With the news that we have from Mr. Draghi and tomorrow the non-farm payrolls, okay, we need to be alert because we can see a possible break this and test the 127 area, okay. But like the market sentiment indicators, okay, and we'll see there clearly what I am seeing on the charts, okay. Let's open here, okay. So let me refresh this. Okay, it's already refreshed. Let's go to net, zoom. Okay, what you can see here, okay, prior to the ECB rate announcement, we have a lot of stops on the market, okay? We have below, okay, 125.80 area, okay? Then we have the 125 till 126.50, okay? And you can see as market develop, they go up, okay? And then they strictly go down and hit these stops, okay? Right now, what we have? We have the most pressure on the sell side, okay? On the short side. So the majority of the traders are on the short side. And you know that this can be a signal of, okay, that market can go higher, okay? It's important to know, and we clearly see that the major stops, okay, of this sell pressure are now, as you can see on the open orders, are at the, okay, till 126.50 area again, but the majority are at 127, and the biggest are at 128. So what we can interpret here? Okay, mid-long-term traders that were short, they can reverse their positions, okay, mainly if euro go above 128, okay? This is for mid-long-term traders, okay? When we see these levels here on the open orders, when we see these huge stop levels, we can understand that this is the median long-term traders, okay? And what they are expecting is if euro go above 128, okay, they will reverse their positions to long, okay? At 127, we can term, okay, some are stopping at 127, but the majority are at 128. And if you see on the charts, on the Renko charts, let me open here, we will see here is preferable we see on the 34 pips levels because they have longer time, okay? We can see that 127 was the latest great resistance, okay? Before the market went down, okay? So 127 they are stops, and then again at 128, this level, this level, okay? And as you know, this level, what can be, okay? This level can be a lower high, okay, from the major, okay, this major move, okay, market is gaining momentum here, it's going up, okay, short-term traders are already long, okay, expecting the market to go further up, okay, but the majority, as you see on the order book, sorry, are reversing their positions at this level first, 127, okay, and then at 128. At this level, this big line, this big white line here, okay, the upper line, okay, they are expecting that market go at least testing this level here, okay, the 130 level, okay, 130 level, okay? You can interpret this at 130 at Forex, as you know. Okay. They can think, okay, if market break this, okay, we have here a minor resistance, okay, at 128. And then if break here the 128, 128.20, they can think that market go up again. This is the medium term, long-term perspective of the traders, okay? We don't know if those traders that are reversing, they enter it at 132 or 135. Okay, we don't know that, okay? Because unfortunately, we don't have that historical tools, okay? We have at Oanda, but the maximum is 1. So we can see where they entered or where they entered. So, but that gives us a clue that now, for what I see and my perspective is, okay, market is losing momentum here, okay? Is losing momentum. Although the news that come, they are more or less good, okay, for the European community, okay? So we can thought that this may be a losing on momentum, market go down, On other side, if this was a clear break, okay, if this level here what sorry, if this level here was clearly a break, okay, of this congestion area, okay, this was a break, we can think it 127 and 128 next, okay. On the downside is important, see that 125.58 level, okay, this level here, if market can break this, certainly we go to 125.30 area more or less. If break, okay, they can test, the 124.70 area. This big area here, let me show you here. Okay, this big area here, let me open the ellipse. Okay, this area here, this comes from 22 August, okay? Sorry. And what I can interpret here, this is a major congestion area, okay? We can see here clearly they want to go down or they want to go up, okay? They go up, down, okay? This is a clear congestion area. When I see this, the market will certainly, for sure, the market will move, okay, a lot, okay? Right now, my odds are for the short side, although are for the long side, sorry, because what I see on market sentiments. Although that measure stops there, they can lead to banks and institutions interpret, okay, they are thinking that this may be a top of the sell, okay. They want now protect their profits, okay. If market came down a little bit, okay, let's say 123, those top levels for sure will go to 126.50 area, okay. So that way they can scale down, okay, the price above 150 pips, okay, from the major traders or the investors that's looking for medium and long-term traders, okay. They scale down 150 pips and they can go again and test these hikes instead of leading the market to 127 or 128. Okay, so for tomorrow, this is the NFP. We need to be careful, or the levels we want to see is, for now, is the development of the trades. Okay, for now is the development of the trades because US opens now. Okay, let's see how they digest the numbers, okay, and the speaking of Mr. Draghi. Let's see, okay. If market today can lead or can go to 124.70 area, okay, we can interpret that, okay, they can go further down, okay, they can scale down the stops that are 127, 128 level, okay, they can make some retracement of this short move, okay, scaling down the stops, okay, and putting people from short to long, so in that case they can bring the market down, okay. This may be some confusing, okay, because it's too much information, but the higher picture, okay, of the long-term picture is this, okay. This happens a lot of times, and with time you will see that these are the major moves from the banks and institutions, okay, in order to clean the market, okay, because these moves here, this down move, then this up move, okay, here, then this up move, then down again, so up, down, this was an attempt to clear the market, to put traders out, okay, or investors out, better say investors out, okay. Although they couldn't do it, and we see this since Monday, that they couldn't do that, okay? They couldn't put traders out, okay? They could reverse sometimes the traders to long, then they hit the stops down. We see this Tuesday and yesterday too. We see those stop levels getting hit, okay? So now, if you are long, take attention of that 125.58 level. Okay, it's very important. If you are not on the market, okay, for a higher probability, we can expect you can wait till markets break the 124.70 area, okay, and can go short here, okay. If you are a more risk trader, okay, we can think in shorting here 125.58, expecting it come to this level. Is important to see because, as you know, we want to see on an uptrend higher lows, on a downtrend lower highs, okay. So it's important. If break this level, okay, they can test clearly the 124.7. But for now, the key, and this week, okay, since let's see, since the 25 August, the key level is 124.70. On the upside is 124.20. We can call this bar here, okay, a fake bar, okay. That's why I told that sometimes I use the edge in order market don't go there, okay, go there, eat my stops, and came down in. And we can see clearly here, okay, that could happen, okay. As you know, I wait 2-3 bars, okay, on opposite to enter. If I have entered short here, okay, I will reverse for sure at this level because break the previous high. Although at this level, you can do a hedge, okay, of the position, of your position, okay, and protect your account from this possible down move, okay. So this is a way I can show you previously how we can use the hedge in our advantage, okay. The close, as you know, is always 1 bar above or 1 bar below, if you go. So this way, at this level here, okay, market is, if market came to this level, we can clearly see that market is gaining amplitude, okay. Not telling that market is gaining momentum. Market is gaining amplitude. And what is amplitude? Amplitude is market go and clean the levels high or the levels low, okay, in order then can go clean, okay, to a further move, okay. We see clear that market go up, okay, break the previous high. If we edge at this level here, okay, we'll close our edge here because it's 1 bar below this, okay. We can then make another edge here, okay, in order if market decide to go up, okay, again. If you do an edge here, okay, you protect. If you do an edge here, you close your edge here, and then you can clean, okay, and collect your profits from further down moves, okay. This is a very good example of how I trade, okay, here, okay. So the euro, the levels are these, okay. Tomorrow is a big number. Today we'll see how they will develop, okay. If this was not a fake break, okay, and if market can go up from here, okay. If come down the 125.58, then 125.37, then 124.70 areas. Okay, so the euro is, this is my view and my perspective. Okay, Phil, what kinds of charts are you using? They almost look like, yes, Phil, they are Renko charts, okay? Like I told you at the beginning of the webinar, for those who are new, it's good to see our previously recorded webinars. They are available at fxstreet.com, okay, on the recorded webinars, and you see there how you can create these Renko charts on the MT4, or if you use another platform like TradeStation, NinjaTrader, or MultiCharts, they are already built in. Okay. Um, the range of the Ranker charts I use are the 21 pips, okay, 34 pips, and 55 pips. In this case, on the left we have the 21 pips for the euro. On the right we have the 34 pips. Okay. Other interesting pair, okay, to finish is the Japanese yen, okay, that maybe is making an up move from here, okay. If you can see, they test this level, okay, this range, okay, this range here, okay, they break. Now it's important to see if markets are able to at least test this level here, okay, the 79, this is 79.40 area, okay. It's important to see if market is able to go there, okay. If markets go down from here, okay, we can expect at least half of this amplitude here, okay. Let me do this, okay. Let's put this on red, okay. If market go down from here, okay, sorry, this is here. If market go down from here, and if break, we can expect at least half of this amplitude in the next down. So it's 3 bars, okay. If market go down from here, we can think that the Japanese yen can make new lows, okay, from the here in this case, okay. Okay, this is interesting because they could break this range, okay. And if markets go up from here, we can expect at least, we'll see if market can go to 74.50 area, 40 area, sorry. If go down, we can expect at least half of this amplitude, in this case 3 bars down, okay. So we can expect a test of the lows or a break of the previous lows, okay. On the Japanese yen, I mostly use the 21 pips range, okay, because this is a low volatility pair. Some case when the Bank of Japan interviews, okay, interfere in the market, these moves, but mostly of the time is a low volatility pair, so 21 pips is very good to see. So, well, time flies again. On the GBP, okay, on the Great British Pound, okay, we have here a break of the previous high. Okay, let's put this on white. Okay, we have here a break of the previous high. They go and break again the 159 and then came down again to the 159. So 159 is key level here, okay? If they can break the 159 clearly, okay, we can see can go back, okay. We'll see that market went down, then beginning gaining momentum here, okay, this gaining momentum here. So the levels to watch even tomorrow for the non-farm payrolls, okay. I want to see a clear break of this level in order to seek in shorts, okay. For then market can test this level here, okay, at least this level, okay. Although the risk reward on this trade, okay, is not my style of trading, because if we go there, we have to put our stop above this break, okay. So we have 5 bars, okay, for possible 3, okay. I need to see a clear break, okay, market moving fast in order, okay, let's go, because this is going to go further down, okay. So it's good to analyze the risk reward of the trading in order to see if there is a possibility, okay, or the ability to make profit and not risking too much in the account. So these are the major pairs, okay, to see tomorrow levels. Tomorrow we will not have the webinar as it is the non-farm payrolls, okay? And FX Suite have a special event for non-farm payrolls. But Monday we will have our webinar at the same time, 33rd GMT time, okay? Those who aren't familiar, you can have a 10% discount on our automated trading signals, okay? You can see more details at fxstreet.com, okay, or at our web page. If you have any questions, okay, you can contact us at intuitiontrading.com or at the email tradingdesk@intuitiontrading.com, okay? If you have any final questions, please, we'll have some 1-2 minutes too. So if you have any urgent questions, I'm here. If not, I won't. Okay. Okay, Phil. You can see on the Renko bar charts webinar, the part 2, you can see all details there, okay? We put the script available so you can see how you can apply the Renko bar charts to the MT4 platform. You have all instructions, okay, on the webinar. I explain all instructions regarding the build of the Renko bar charts. So, if there is no more questions, I hope you all have enjoyable, okay, and profitable rest of the week. A great weekend for all, and hope to see you all on Monday on our In the Money webinar. Okay. Thank you very much to all. Thank you. Bye.